What's up, everybody? Thank you for joining today. My name is Stock Sniper Alex, and today I want to talk to you guys about how to scale in and how to scale out of your position when you're trading these stocks. What I mean by that is when you buy a stock, you don't have to buy your full position at one price. You can split it up, buy half at one price and buy half at ideally maybe a lower price, and then you'll have an average position from there. On the other side, when you go to sell, you don't have to sell your entire position. You can take some profit at a certain level, and then if it goes higher, you can take more profit at another level. So that's what I mean by scaling in and scaling out. Today, I'm gonna show you two examples of stocks that we traded just this past week. The first one, we scaled in, we bought at two different prices, and we scaled out. We sold it at two different prices. I'm gonna walk you through a live recording of my phone, and it is recording the stock that we traded. The first one is IPIX. It is an OTC penny stock. It's a first green day, a pattern that we love to trade. It was setting up, looking nicely during power hours. We had already bought in our first position at 16.4. We averaged down and we bought more at a lower price. What I'm gonna show you is the timing of us buying again at a lower price and moving our average down. And then I'll show you the next morning of when we go to sell, we sell half right away, and then we sell the other half after that. So I'm gonna show you live footage of that. What you're looking at is IPIX. It's the first green day. It looks very nice, holding VWAP, broke the high of day coming into VWAP, and we bought at 16.24. So we're already in. Now we're looking to buy more because it dipped. It actually came down below the price where we got in, but held that level and is coming back, and there's only 10 minutes left into the close. And since it's holding 15, looking strong on a first green day, we know it could go higher. So we tried to put an order in right here at 159. And as you can see, the level two, it's a little above 16 cents. Basically, we just waited to see if we get in at 15.9, we're gonna move our average down, and there it goes. You know, the bid came down to 15.9. And we got our average position down to 16.16. So what we just did there, we averaged down and we moved our average position size down. But when you get an opportunity, if you buy at one price and you see a better opportunity and it's still holding the key support level, you can add to your position and bring your average position down. And now coming into the next day, we got the gap up, exactly what we were looking for. You can see the bid is at 18, ask is at 19, and what we have is an order in pre-market. Very key, put your order in pre-market. It's a half sell. This is not our full position. Boom, right there, the market opens, we take it, and we sold half. So you could have sold the whole thing, but we sold half right away there, and the plan was if it came back below the red to green level where buyers were hanging around, we would sell the rest of it. Ideally, we want it to go higher, but sometimes that doesn't happen, but you always have to stick to the plan going either way. So right now we have half still, and look, there's some sellers coming in above 18. It couldn't really get any movement in the first couple minutes. And there's a big seller at 17.4, so we just secured the rest of it. We got a nice gap up, it's up 6%. So we put the bid, we put our limit order below where the actual stock is right now, just in case it starts to move. So the next stock we're gonna look at is TOMZ. And this is the same type of thing where we were looking at it. It was a first green day during power hour, the same time, OTC, same type of setup as IPIX. And we were looking at it in power hour and looking to swing it overnight. So what we're looking at here is we bought in 7,000 shares at 61 cents at around 3:15, somewhere in the beginning of power hour. As it was holding that daily support, perked up and had a chance to break high a day, and that's what it did. And what you're looking at here is we actually have a great push during power hour. So we have a 20% push right here. So we're actually gonna take half of our position. This is an intraday trade. All right, so this is considered a day trade right here. And this is very important. You have to understand, if you're under the pattern day trade rule, you can't trade a day trade, buy and sell in the same day more than 3 times in a 5-day period. So you have to be careful with how many times you buy and sell in the same day. That's why we like to promote going overnight with your position. Our account is over the PDT rule, so we don't have to deal with that. So we can take some or leave some whenever we want. 20% intraday, and then we're swinging the rest of it overnight, the second half looking for a gap up, and that's what we got here. This is pre-market, again, a order in pre-market, same exact type of thing. We're rewarding ourselves for a gap up from 68 all the way to 73 cents. That's another 7% gap up right away when the market opens. And we take our 20% there for the rest of it. And that was it. And you get your reward, you want to secure the bag. And when you get, we're only risking 3 or 4 or 5% for the possibility to make 20%, 30%. That's the opportunity with these plays. That's how you scale in, and that's how you scale out of a position. Once you start to find the rhythm and you understand how these move, and understand that if you have a bag waiting for you there, 20, 30%, and it happens so quickly, you gotta at least reward yourself. That's how you scale in and scale out, and it's just rinse and repeat. So hope you guys enjoyed this video. Any feedback, let me know how I've been doing. I'll see you guys next time. Peace out.